Alright, good morning guys. So, this is going to be the first of these video lessons I've actually had to do from home, given the whole current situation. But as before, I'm going to write all notes on the whiteboard behind me. I'm going to go through each of the terms we're going to discuss, give you guys as many examples as I can. And if you guys notice down in the description section, you'll have a complete list of the notes, the do not question for the day, which you guys need to do before you watch this video. And then the exit slips down at the bottom, and there's a couple of links in there. So one's a YouTube clip, and the other one's kind of an example of showing what we're discussing today. So just down there for your reference. And if for whatever reason you guys have any questions or you don't quite understand something, feel free to shoot me a comment in the description or shoot me an email. I'll get back to you as soon as I can. So, you guys, do you have a question for the day? What are taxes and why do they exist? So, starting a new unit, it's not something we've really discussed much in class before. So some of you guys might have said, oh, taxes, that amount of money I got to pay, when I go to a restaurant, the extra they add on at the grocery store, whatever it may be. Oh, taxes are that thing that the government collects every year from my job, whatever it may be. So you guys could have done a couple different things with this. So not really just trying to get you in the kind of mindset, kind of get you thinking about what we're going to be discussing. So whatever you got, just make sure you get it written down, and then we'll talk about getting everything submitted at a later time. So, first thing we're going to discuss, something known as progressive taxes. Like I said, for whatever reason you guys are having trouble seeing, try to get everything centered as much as possible, but like I said, all the notes we're going over in the descriptions, they're actually down at the bottom of the video. So, progressive taxes. A tax for which the rates increase with the amount of income, which basically translates to the richer you are, the more taxes you pay. Alright, so one more time. Progressive taxes. A tax for which the rate will increase with the amount of income. So, if any of you guys have had a job, or you guys looking to getting one in the near future, they take out something called income taxes. And so on your check stub, you see the amount of money you made. It'll say state, federal, and a couple other things. And so what determines how much you pay out of your check depends on how much you make per year. So if you guys take a look at the link down at the bottom, click on it, it says investopedia.com, and you guys scroll down a little bit, you guys are going to see a chart. It's going to say a certain number of percentages on the left-hand side, then it's going to give a dollar value in the middle. So if it says, hey, if you make between this much money and this much money every year, you're going to have to pay this much in taxes or this percentage, and so on and so forth. As you guys notice, that percent is going to go up with the amount of money. So if I make $20,000 a year, I'm going to be paying a lot less in taxes than somebody who makes $500,000 a year. And so contrary to popular belief or certain myths, yes, rich people do pay a lot more money into taxes. So we got progressive taxes. The next one we're going to discuss is something called proportional taxes. Proportional tax is a tax that stays the same regardless of income amount. So this is kind of an alternative to progressive taxes. Whereas progressive taxes, it changes depending on the amount of money you make. Proportional tax, everybody pays the same percentage. So obviously, if I'm making more money, I'm still going to pay more in taxes, but it's all done by the same rate. So for example, if we say, hey, the tax you got to pay is 10%. So if I make 10% of $10 is going to be a lot different than 10% of $1,000. But across the board, no matter how much you make, everybody's paying that same percentage. Everybody's paying that same amount. So as opposed to it going up and down, depending on how much you make, it stays at that exact same rate, no matter if you make $1,000 a year or $1 million a year. So we have progressive taxes, proportional taxes. Next up is something called regressive taxes. So regressive tax is when the percentage of tax you pay decreases as your income increases. All right, so one more time. Regressive tax, when the percentage of the tax that you pay decreases as your income increases. So this translates to is, okay, if I make more money, I'm actually paying less money in taxes. Whereas progressive taxes, it goes up with the amount of money you make. With regressive taxes, it goes down with the amount that you make. So under this system, the richer people pay a lot less into taxes. And the whole thing behind this is that, because they're paying more actual dollars into it with the percentages, that, okay, we're going to give them a break so they're not paying as much. So it's a little bit more fair. So we got three different ways of kind of looking at it. Three different theories about how, okay, which one should we have? And so if you guys look down at the bottom, you'll see a YouTube link. Go ahead and pause the video right now and click on that. It's about a 6-minute video. Just kind of click on it, watch through it, and then we'll get back to it here in just a second. All right, so after watching that, kind of at the end, it kind of mentioned how, okay, out of these three systems, the United States currently has the progressive tax system, where once again, it goes up with the amount of money that you make. And so hopefully the whole purpose of that video is to kind of give you this idea of, okay, here's kind of what it looks like. Here's the argument from somebody who doesn't make a whole lot of money, and here's the argument from somebody that does make a lot of money. Just kind of giving you both sides of that perspective. So last thing we're going to discuss is something known as a tax base. Erase this quick. So, tax base. This simply refers to income, property, goods, and services that are taxable. All right, so quite simply, pretty much anything that you pay taxes on. So for the first one, income, we pay taxes on every dollar that we make. The state, federal, state tax, federal tax, whatever. We're taxed on property. So for example, my house. Every year, me and Ms. Warren have to pay something called property tax. And so it's an extra tax that's added on. And then you have stuff, then you have goods and services. So every time I go to the grocery store, every time I buy stuff, okay, there is sales tax at the end of the total price. And so tax base, just basically saying, okay, what are all things that we have to pay taxes on, whether it be, whatever kind it may be. All right, so kind of wraps up the notes for the day. Exit slip, like I said, down at the bottom of the description. Describe and explain something new that you've learned today about taxes. So some of you guys came in with kind of an idea of what they were about. So really you're just kind of telling me what's something you got out of this. And so if you already knew everything, which I'm kind of doubting, but if for whatever reason you already knew all this, how do you feel about the way that we pay taxes today? So do you think it's a good system, bad system? Do you think it works, it doesn't work? Whatever you guys pretty much think about it. About 45 sentences. Like I said, if you guys have any questions, shoot me an email, write something down in the comment section below, and I'll get back to you as soon as I can. I'll see you next time.